last but not least presenter, Chris Kern. I don't know, I'm not sure I can really give him an introduction because, as I said in the write-ups, I really don't understand this very well. I'm trying to understand it better. He's promised to educate me more. But Chris came to us from Regiment, and so I think between Chris's presentation and what Regiment has to say, I think they'll tie this together. But obviously, this is where things are going, whether us old folks like it or not. But this is where it's headed, and so pretty exciting stuff.
Well, David, thank you. Appreciate the opportunity to present to everybody. Also want to thank Mike Cavanaugh from Regiment Securities for sponsoring the event, as well as sponsoring Fernhill. So, getting right into it. What is tokenization? Some of you probably are familiar with tokenization, maybe others not. Very simply, tokenization is a process of representing ownership of a physical or financial asset, like real estate or commodities or what have you, and it's digital printed on the blockchain. So how many of you own a house or a car? Well, you probably have a title to that car, right? That title says information about the car, the house. It also gives information about your ownership. And so what tokenization is basically a title to the asset that we're talking about. It's created into a smart contract and it's printed on a blockchain. That's pretty much what it is. So that's what tokenization is in very simple form. It's a title that's printed on a blockchain that has benefits of trading it down the road, efficiently creating information where you can transfer it to people under certain conditions and things of that nature. So why is tokenizing real-world assets, otherwise known as RWA, why is it the future of finance? And also, there's been numerous companies like BlackRock and Forbes that have pegged the market value in the next 10 years at $30 trillion. That's a T, trillion. Right now it's about a $1 trillion marketplace, and they're projecting $30 trillion in about 9 years. So the major benefits of tokenization are increased liquidity, whereby you can take a tokenized asset and trade it like you would a stock in your trading account. That's one thing. Secondly, when you create a tokenized product, you're also imprinting information about the asset, the ownership, restrictions on transfer, and things of that nature, far and above and beyond when you just buy a stock online or something like that. And then also putting everything into a organized platform that's all technical and digital, it creates scale, it creates efficiency, it creates the ability to move that asset around more efficiently versus in private markets. Today, it's more of a manual process. It's very cumbersome. There's a lot of different layers. So tokenization really puts all the technology together to make that available in a much more efficient transaction. And then also you're able to bundle compliance and regulatory things in there like KYC and AML. You're going to have to qualify investors to make sure they're accredited or what have you, and things of that nature, where we're doing that process as an organized, do-it-yourself fashion where you can go online, buy this asset, and then later transfer it and trade it as you weigh, just as you would with regular stock. And then it also enables fractionalization and democratization. And that's where the real big piece about tokenization exists. You're able to take an asset, $10 million apartment complex, or a whole real estate portfolio, whatever it may be. You can create fractional ownership at a very smaller unit where you can sell it at units of $1,000, $5,000 versus much larger increments if you were to buy from a fund. And that also enables democratization where everyday investors can participate in that asset. So similar to how you invest were to invest in a fund now, a lot of times they have minimum buy-ins of like $250,000, $500,000. You can get into these with a much lower entry point of $5,000 to $10,000. So quick overview of Fernhill. We're publicly traded on the OTC markets. Our symbol is Fern, F-E-R-N, and basically we're leveraging technology around real-world asset tokenization and making that democratized on a global basis. And so our system is built upon tokenized assets where you can have the ability to take an asset like a fund, make it available at scale, and have people, like everyday investors, invest in it on a regular basis. And so, in short, we're building the infrastructure for the future of finance and investing based upon tokenized assets. So, there are several problems that we solve in the tokenization process of these types of assets. And when I say assets, we're really democratizing the private capital markets. So, real estate funds, private equity funds, venture capital, commercial real estate, and direct private investments in established businesses. And so one of the big things is vetted deals. When you go to a marketplace or you go to invest in something, you want to make sure it's vetted. You want to make sure that there's quality people managing it. You want to make sure that their numbers are up to snuff. You want to make sure that it's a quality project. And so we're going to focus on institutional grade projects where there are already pre-existing institutional investors involved, or there's a management team that has that pedigree and that background where they've managed institutional grade investments for at least several years. The second part is we're providing easy access. Many investors don't know where to find these types of opportunities, don't know necessarily the right people, or they're not a super high net worth investor or institution that has access to these types of opportunities. So we're also providing easy access to these types of investment products. Lower entry. So again, as I mentioned earlier, when you go to invest in a fund, your typical minimum is going to be around 100 grand to $250,000, and there's plenty of funds out there with a minimum of $1 million or even more commitment. What we want to do is when we tokenize these things and democratize these investments, we're giving you an access entry point of $5,000, $10,000. You don't have to commit $250,000 or $500,000. So that's a really big thing, is to create that democratization where investors like yourselves can access these opportunities where you wouldn't have an opportunity before. And then lastly, and probably even more importantly, is liquidity. Liquidity for these funds, where if you invest in a venture capital deal or private company, you're typically holding on to that investment for 5 years, 7 years, maybe even 10 years. We're creating a liquidity engine within our marketplace and within our platform where if you want to start trading that asset, other people that are already in that investment opportunity, you can buy and sell with each other on a peer-to-peer basis. The second part of that is we're going to be opening up an alternative trading system, which is an SEC registered platform where outside investors can come into it and also buy and sell the same assets that you're just going into. So the liquidity engine is a real big part where instead of holding on to something for 3 years, 5 years, 10 years, you can actually start creating liquidity for yourself within year one. So, what kind of assets are we looking at? We're looking at commercial real estate, private equity, venture capital, private credit, direct private investments, and then alternative funds. And it also can include things like art or commodities or even public equities. We're really going to focus on the private capital markets, which are really private equity, private credit, venture capital, and commercial real estate, and direct private investments. We think that is the biggest asset class grouping to go after because it's been so much underserved, and there's no democratized access now to those asset classes. So how do we do that? So we have relationships with a lot of different fund managers, a lot of different groups. We're partnered up with Regiment Securities over here. As we get allocations in those funds in terms of, okay, it's a $100 million fund, we'll get a $10 million allocation. Typically that's done in the form of a letter of intent saying, hey, you get ability to invest in our fund up to $10 million. We then tokenize that allocation in a special purpose vehicle that we tokenize and make available to the public. And they can invest in that fund through our special purpose vehicle at a much lower entry point, $5,000, $10,000, what have you. And then once we collect all the monies from that, we invest in that allocation, and we then make it available to everyone else. And then going forward, we are just a direct pass-through vehicle for these funds, so we go with the continued reporting that they provide. Any distributions they make, you'll get the same distribution. We'll also take care of any other reporting that they need to make their offerings compliant and whatnot. And then, of course, the liquidity, where if you were a direct investor in that fund, you wouldn't necessarily have liquidity, but through our platform, you would, because we have the liquidity engine with peer-to-peer trading or through the ATS. Our revenue model, very simplistic and straightforward. We get a percentage of each project we tokenize. Fees will range between 2% and 5% per allocation that we tokenize and put onto market. And then for going forward, annual asset management fees for that specific fund that we've tokenized. And then that's an ongoing annual management fee that we get that ranges between 0.5% and 2%. And then on the liquidity side, we'll get small, per ticket trade charges, very small percentage, small ticket fee. But when you're talking about thousands of investors and multiple products, those fees add up pretty quickly. And then also we have other complementary revenue services and opportunities where we have a digital asset trading platform, Main Block, that's all about trading between actual exchanges like Coinbase. We have Lendblock, where we've partnered with a institutional investor that likes to put lending products out, where we would get a commission fee or a referral fee. TradeBlock is another software platform that's part of Main Block. That's a graphical user interface that people have expressed interest in licensing from us. And then lastly, but not least, we have Custody Block, that is a digital asset custody where we've partnered with other major custody firms to do that on a large-scale institutional basis. This was the slide that was the big moment for me, that was all about the growth of tokenized real-world assets. And these dollar signs are in trillions. So again, this is a massive, massive, massive market opportunity. Today, 2025, we're at a 1 trillion market value. In about 5 years, they're expecting it to be around $10 trillion. And if you look at the top largest segments of growth that they see that in, it's the same private capital markets products we're going after. Real estate, debt, investment funds, and private equity. And so we're going to be riding on the back of this growth and on the back of the development of tokenized products on a democratized basis. So, big thing that's been holding the industry back is lack of a regulatory framework. The prior administration was really enforcing by lawsuits and holding people back and creating a lot of legal issues for a lot of the crypto companies, and a lot of that came about through various issues with things like FTX blowing up and whatnot. But more importantly, we have new regulations that recently got passed and proposed that change the entire landscape with the new administration. Finally, we have a regulatory framework where the banks and financial institutions can move forward with clarity. And so we had the Genius Act passed back in July that really opened up the gates for stable coins and for that payment level to go really kind of wild. So you're going to see stable coins going, Circle did an IPO, almost $1 trillion market valuation right out of the gate. You have major companies embracing stable coins as the next new payment method. The Clarity Act, which also came out in July, that really created a framework around the CFTC and the SEC kind of segmenting who can regulate what. It also opened up a lot of doors around financing, around tokenized assets and things of that nature. So at the end of the day, where we are now, there's a lot of big benefits. We have tailwinds. We have a very clear regulatory framework now where we can move forward. Institutions are finally confident that they can get involved and invest in tokenized assets and issue tokenized assets without being charged by the SEC. And so it really creates a major push for growth and globalization of tokenized assets that will push that growth curve of 10x in the next 5 years. So our go-to-market strategy is pretty straightforward. In the marketplace that we're going to offer, it's about supply and demand, right? The products that we offer are the supply. So we're going to align with fund managers and companies and sponsors that have institutional investors already involved in their projects, and also have the institutional pedigree as our products. And then our distribution, which will be the demand side of our market, is working with investors like yourself, working with wealth managers and IRAs and fund of funds that want to invest in these products that they wouldn't have access to otherwise or just don't know about. And then again, as I mentioned earlier, the verticals we're going after is really the private capital markets. So private equity, private credit, venture capital, alternative funds, commercial real estate, and direct private investment. And then on the other side, kind of the back end of it is all about partnerships. We're aligning with and working with the top blockchains for this, which is Polygon and Solana. Liquid Mercury is an announcement we just made this morning, our official JV partner that helps us with the infrastructure to make this a compliant legal platform to trade and go forward with. Fireblocks, which is a major custody provider in the crypto world. And of course, Regiment Securities is our broker-dealer of record. that we're moving forward on. On the marketing side, we're going to go with typical content marketing, go to webinars, trade shows, host AMAs, and do regular internet online marketing like PPC and video marketing and things of that nature. And then the second part of this is also looking at and acquiring registered investment advisors and wealth managers that already have assets under management, because this is really about an asset under management play, asset aggregation. We're creating funds, we're building assets. So in order for us to really expand and grow, we're going to acquire more RIAs that have assets under management, which also gives us another audience of active investors to invest in our products. So it basically feeds the machine and increases this flywheel effect. So the leadership team, I can spend all day talking about these awesome guys, but more importantly, we have over 80 years of experience, have collectively put together over $2 billion in financing and M&A transactions, and have generated over $1 billion in sales. I myself, I have a 30-year background in corporate finance and M&A, have traditional Wall Street banking, working with firms like Lehman Brothers, and most of that has been in technology arena, in large part around fintech and financial services. So at the end of the day, we're developing a tokenized, democratized, and compliant platform, which is really where we're going at, is we're building this institutional grade platform for real world assets. And with that, we have all these partners we're aligning with. Our infrastructure is based upon Amazon Web Services and Google Cloud. Our securities partners, Regiment Securities. We're looking at Fireblocks as our custodian. There's others that we're looking at as well, like BitGo. Liquid Mercuries are one of our main technology providers and partners. We just announced that today. And then, of course, leveraging major blockchains like Polygon and Solana. And so we're offering a growth equity round to raise capital and commercialize this at scale. We're looking to raise up to $5 million. Current B1 round is at a $4 million pre-money valuation. It's based upon a 506D structure, and is really to commercialize and put this platform to market. And one of the things that I can say too is with the partnership with Liquid Mercury just announced, we're actually expecting our marketplace to be up and ready within the next 2 or 3 months. So this is not like something down the road. This is something that's happening within the next couple of months. And this is also something where we're expected to be uplisted to a senior exchange like NASDAQ next year. So quick investment highlights. We're going after a major high growth industry, tokenized real world assets, 10x in 5 years, 30x in 9 years. We already have a strong regulatory framework in place with the Genius Act and Clarity Act, creating new opportunities and growth for companies like ourselves, major tailwinds that help push us along. Our structure as a preferred equity is very investor friendly, very, terms and pricing very investor friendly, to an actual about 30 to 40% discount to where our stock is trading today. We also have very solid technology partners that are in place that provide stability and strength. And then of course, our team is just, we've been there, done that. We've built companies, we've sold them, we've raised, billions of dollars in capital between financing, M&A, and IPOs. One of the last projects I was on is called Click IPO, or now Click Capital Markets. They're one of the largest retail distribution platforms for IPOs. They democratize access to IPOs. We're now democratizing access to the private capital markets. And so, a team that's been there and done that. So, here's a quick screen of how to invest. You can scan the QR code. Gives you the access to Fernhill's investor portal at Regiment Securities. Simple, just review the documents and subscription agreement. And otherwise that, you can send that in and wire your funds. I can take questions afterwards. And Mike is here as well as part of Regiment. And I really appreciate your time. Thank you very much. And David, really appreciate it.
So I was going to say one thing. I know that these are all the new buzzwords, right? But I mean, if you really think about it, democratization is really what they're really talking about in democratization. And I think that our sponsors, Dean Delisle, and I don't know if Mike's going to come up or Dean's going to come up and talk from Regiment Securities, but they're working on a lot of things that sort of fit into this democratization thing. So they have a client regarding that, but there are some of the things they are doing fundamentally that are geared to this democratization thing. And the democratization thing really is just trying to create markets where the average small investor can participate in investments that have typically been reserved to institutions or accredited people and so on. And we've already seen a lot of democratization. I think Bitcoin is probably the best, or cryptocurrency is probably the best example of that. And they're also the best example of those things residing on the blockchain and all the things that are kind of hard to understand. But at the end of the day, the democratization stuff is coming. And I think that what that probably means is, investment banking in the traditional sense is going to change. Now, I don't think that the investment bankers that make all their money being investment bankers are going to let go of that, easily. But it's already starting to happen. And you mentioned Click. I mean, I think as they will describe to you, Click has been able to provide individual investors with pieces of IPOs, for instance, that everybody in this room, I think, knows you never would have been able to participate in the past. And Mike and Dean can maybe describe a little bit more of how that happens. But the whole notion of democratization, tokenization, is really about people being able to own pieces of assets that they have traditionally been shut out of. And really that's about the infrastructure to do that, and the ability to trade it, and so on and so forth. So that's what's coming, I think, whether we like it or not. So.
If I could just add to Fernhill real quick, and I think Dean's going to come up and talk a little about Regiment Securities. So I always say I'm like Forrest Gump. The words like tokenization, democratization, it just feels like word salad to me, and I don't understand it. So what I do understand is I used to trade on the floor at the Chicago Board of Trade, and I used my hands, and I wrote on cards. And that all went electronic when the exchanges allowed the machines to hook up, and then high frequency and algorithmic trading took over. And then online brokerages like E-Trade, Scottrade, Charles Schwab, Fidelity all came in the 90s. And that was like science fiction, right? We're used to our grandfathers and grandmothers calling their broker at Morgan Stanley and getting charged $300 for a commission, and that went down to $14.95. Now it's $0. Robinhood doesn't charge commissions, right? They make their money in different ways. So when you look at the tailwinds of democratization, tokenization, digitization, all of those buzzwords, really what you see is the tailwinds in private markets in the last 20 years have picked up. There are more LP investors in private funds than ever before, and it continues to grow. And the reason a lot of people don't grasp that is because there's very little liquidity and almost no transparency. So a company like Fernhill, what we really like about it is Chris isn't a 27-year-old going to conferences, like a crypto bro. He's got 35 years of experience in capital markets as an investment banker and all the relationships that come along with that. So he's already got a couple funds, like big name funds, under LOI. Regiment Securities, we've got over 500 GP LP funds as customers that we placed over $1 billion this year in LP investments. And we're just going to push all of those over to Fernhill as this tokenization, like digitization, fractionalization, globalization conversation keeps popping up from the GPs of the funds. We now have an outlet where we can just push the funds over to Fernhill. They put it up in what is more liquid, transparent market, just like we're used to seeing in the 90s with stocks in the early 2000s with equity options, and now making the private markets less opaque and more liquid. So that's why we're looking at Fernhill. That's why we're investing in Fernhill. That's why we're partnering with Fernhill. Just wanted to throw that in there. And now I think Dean's going to talk a little bit more about Regiment, and then I've got a little phone number I'm going to share with everybody.